Everyone is talking about mortgage rates, but what's really going on and how do you get the best rate when buying a home in New Jersey? Today I'm with Claudia. Claudia, hi.
How are you?
Tell us what mortgage company you're with.
I'm with New American Funding.
And what is your position there? What do you do?
So I'm a loan officer and I also handle business development for the company.
So she's gonna break it down for us today. What's going on with interest rates today?
That's like the hot button topic, right? But interest rates have a lot of factors that go into it. The average rate today on a 30-year mortgage is going to be in the low sixes on a conventional 20% down, clean type of file. If you're talking about an FHA loan, you may even be able to get a 5 in front of that.
Oh, what's an FHA? Tell us.
So FHA is traditionally used for first-time home buyers, but not only limited to first-time home buyers, and it allows for a lower down payment. So an FHA loan will have a 3.5% down as the typical down payment. That same down payment will apply to a single family, to a multifamily, or even to a condo, whereas with a conventional, you need higher down payments for multifamily homes.
Interesting. So what I'm understanding is not all rates are the same and not every person will get the same rate.
Absolutely not.
So what kind of factors do you factor in, or
The standard factors.
so what are they?
So it's going to be first-time home buyer,
Okay.
first home or second home, vacation home. So how the home is going to be used. The type of home. Is it a single family? Is it a multifamily? Is it a condo? Is it attached? Is it detached? All the goodies, right?
Okay.
Your credit score, your debt to income ratio. I mean, it keeps going. It's not just one or two things. It's an enormous amount of key points that are used to determine the rate. And can I just say, like, as a lender, I make the same whether I give you the lowest rate on the sheet or the highest rate on the sheet. So there's zero benefit as a lender to give you a higher rate or give the client a higher rate than what they qualify for.
I understand. So speaking of which, how does a lender get paid?
We get paid by the bank when the client consummates, finalizes the loan. So we work for nothing until you actually close on the loan.
So very similar to a real estate agent.
Exactly like a real estate agent.
But it has nothing to do with the buyer.
No.
And it has nothing to do with sellers, so that you get paid directly from the bank.
From the bank, correct.
And it doesn't matter if it's a high rate, low rate, you got it.
I get paid the same exact amount that I get paid.
That's really good to know. Let's talk about what you think is going. I know you don't have a crystal ball, but everyone's wondering what's going to happen in 2026. Are rates going down?
That's the conversation, but honestly, nobody knows. I don't know. I wish I knew, but nobody knows. The goal and the hope and the conversation that's happening right now is that there are going to be multiple rate cuts happening.
Okay.
With the change of the Fed, could that happen? Which that's inevitably coming. That's Powell's term ends in May, so we know that there's a new Fed coming. What is going to happen? I don't know, but the estimates are from the powers that be that it would be going into the fives, into the lower side of the fives by the end of the year, which would be amazing. Yeah, we'll see. I mean, listen, at the end of the day, I was just having this conversation while I was on my way here with a client, a first-time home buyer. And she was telling me that she wishes she had bought in 2020 when she started looking.
Oh my God, everyone.
Everyone.
We just spoke to a client that we spoke to, 2 years ago, 3 years ago, when the rates were like 4, 5.
Yeah, they were in the fives at that time. Yeah, 2, 4, 5, yeah.
Yeah.
And what I said to her is that, look, because she kept going back to our property value is going to drop, our rate's going to drop. And I told her that the best advice I can give her, I can give anybody, the best time to buy real estate is today.
Yeah.
And that's it.
Yeah.
Because the property value is always going to increase. And when rates drop, because they will have to at some point, you can refinance, but you've already secured what you purchased the property for.
100%. And also, what we've noticed is once rates drop, everyone comes out to the way. So even in the last couple of months, rates dropped a little bit. You saw home prices go up because now, again, we're back into bidding wars.
Yeah.
So it's better to lock in your home price
Yep.
than try to chase the rate, because you could always refinance. And I know, Claudia, you've been working a lot of refinancing lately.
We have. We've been refinancing clients that bought as late as even the beginning of this year, when rates were like half to 3/4 of a point higher. And because we are seeing that trend down, it just makes sense to work with them now, refinance them, save them a couple $100 now, wait, and let's say we wait another 6 months or a year until it makes sense again, and take advantage of that decrease one more time.
Like not closing costs when I'm purchasing a home, because I know that's very different.
When you're refinancing.
Refinancing. So my clients always ask me, like, at what point do I refinance? Like, let's say it cost me $5,000 to refinance. Is it that much?
It's actually, it's a little bit more.
Okay.
I would say that refinance costs would probably be on a $400,000 house. It's probably going to be around the $8,000 mark. But one thing that we're not talking about is about what happens when you refinance.
Okay, tell me.
So when you refinance, the month that you do your refinance, your payoff already calculates that mortgage payment that you would have made that month.
Okay.
Into the payoff amount.
Okay, so my own mortgage payment was $2,600.
So that $2,600, you are not making that payment because we're paying that.
Okay, so that's already takes me down to about $6,000, a little less than $6,000. Okay.
The following month,
Okay.
you also don't make a mortgage payment. Okay, so it's another
$2,400.
$2,400.
So it's $2,600 and $2,400. So now it's $5,000 that I didn't make. So really, my refi cost me $3,000.
But you haven't thought about the next part.
Oh.
Okay, the next part is that when you do a refinance and you pay off your existing mortgage, you have an escrow account.
Okay. Yeah.
Okay.
Okay. Let's do that.
That escrow account typically will have about 3 months or 4 months of property taxes.
Okay.
Okay, so let's say your property taxes are $1,000, just to make it easy. You're talking about having $3,000 to $4,000 sitting in that escrow account that is refunded to you as soon as that mortgage is paid off.
Got it. And then, but then you have to give it back.
No, you don't, because I established a new escrow account, and that $8,000 to $9,000 that I was already talking about already includes that new establishing.
So I understand. So to me, what it sounds like, within a year,
before you make your first payment,
well,
you've already recovered
pretty much all of it.
all of it.
Pretty much all of it. Okay. So basically, it's
null and void.
It's null and void.
The expense is basically absorbed before the first payment is actually made.
So as long as so would you say, at what point, what's the threshold? Would you say 0.5%, a half a point?
It's very variable, because one of the other things that we're doing right now is, because credit card debt is at an all-time high, we're actually taking people's credit card debt and rolling it into the loans and paying them off. And the savings at that point explode, because you have a minimum credit card payment of $300 or $400 a month that now gets absorbed into the mortgage. It wipes all of your debt out. There's so much equity built in these houses.
That's insane.
But you're able to do that because of how much homes have appreciated over the last couple of years.
I understand. So let me get this straight. So when you're refinancing, not can you only, like, you save on your monthly payments.
Correct.
For sure. But you could also take your credit card debt.
Yes.
Because you got some credit card debt. Because you bought a house 2 years ago, you got new furniture, you painted, you redid the kitchen, you got new tile, you got backsplash. You're super excited.
Did the things.
But now your credit card that you've been sending the minimum payment to hasn't changed. So that's really interesting to know. That's really great information. So your refi is worth it as long as
it has to make sense. And listen, consultations are free. Give me a call. Let's talk through what makes sense. If there's a true net benefit, yes, we move forward. If there isn't a true net benefit,
you lose nothing.
You lose nothing.
And it's definitely worth a conversation. We're gonna link the mortgage calculator that Claudia just used so that you guys could play with those numbers at home as well, but definitely reach out. It's just a quick call, email, text, and you can get a lot more information about your personal scenario. Thank you so much, Claudia. This was
it was great. Enjoyed it.